In high seas or calm, both opportunity and risk lurk just below the surface. Answers require in-depth analysis. Welcome to BlackFin Group's Shark Cage podcast.
Good day, folks, and welcome to the Shark Cage BlackFin's podcast series. My name's Keith Kemp, President and CEO of BlackFin. I'll be your host today. To start, I want to thank our sponsors. A real special shout out to all of BlackFin's preferred partners: Finastra, Mortgage Flexi Emergent, Cloud Virga, Take 3 Technologies, Prudent AI, Lending Pad, Argyle, and so many more. All of them just doing great things for the banking, mortgage, banking, and lending industry. So let's get started. Folks, I'm very excited about today's conversation as we sit down with MaryKay Theriault, Senior Director, Product Management at Finastra Financial Solutions. Welcome to Shark Cage, Mary. I'm really happy to have you here so we can talk about what's going on when it comes to trends you're seeing in the mortgage tech space.
Thanks, Keith. I'm really excited to be here and just chat with you today on it.
Yeah, we're going to cover a lot of ground, but just before we get started, MaryKay, let me take just a couple minutes to help our listeners catch up with some of your absolutely impressive background in mortgage tech space. But folks, MaryKay is a 30-year veteran of mortgage banking industry. Her career started on the production side of the business as an LO, underwriter, and processing manager for 8 years at BMO Financial. After that 8 years on the production side of mortgage lending, she started with Finastra Financial Solutions, where for over 23 years she's worn countless hats. She leveraged her production insights to run system implementations for over 4 years, then made natural transition to lead client support and as the change team manager before moving to her latest role of director of product development over the last 16 years, really leading the strategy, design, implementation, and development of a new, amazing end-to-end mortgage solution. In my opinion, really now, Finastra is offering what older and even newer all-in-one tech stacks aspire to provide using modern-day technology. So, MaryKay, I'm able to relate with you as I also started my career on the production side for many years before getting into the technology and now consulting both lenders and vendors. So it's not often people in the mortgage tech space can say that they've carried a bag, right, on the front lines of loan production. I have to imagine that that has really contributed to your success as an executive at Finastra, being able to guide them to more meaningful product strategies and solutions for your customers.
Yeah, I think it has. Things haven't changed a whole lot, right? We've added in technology into the tech stack, but you still process a loan really the same way you did 30 years ago, right? You take an application, you verify the data, and then you work it through the closing and you add pieces of technology onto that. But the actual process itself hasn't really changed a whole lot in how we go about start to finish making a mortgage loan transaction.
Yeah, it's just a matter of trying to make it faster and easier, right? Leveraging some of these technology tools that are coming to market as technology evolves. But unfortunately, the industry is just slow to adopt some of these. Do you have an opinion why that is?
I think financial institutions, banks, regulated banks and credit unions just don't want to jump in, right? They want someone else to lead the way and see how it goes. I think one of the things I've seen that the most in is e-closings. We've partnered or integrated with our closing providers over 18 months ago on doing e-closings, and we have very little adoption on that space. And as a borrower, I would love to e-close. I did a loan closing during COVID. I had bought a new, downsized our house. We bought a condo and we did a loan closing, and we actually had to have the notary watch us through a window, sign our documents, so we weren't in the same room. Wow, if I had e-closings. So that's one of the trends I see people, financial institutions really slow to adopt that whole e-closing capability amongst other technology trends as well. But, it's just they're afraid to just jump in.
Yeah, I think you're absolutely right. And as you and I have talked about before, I mean, we're in a very sophisticated industry, right? We're not a very simple transactional, there's just so many data points, so many pieces and parts of our entire lending process. So that can just give a lot of anxiety to just jump in on different types of technology. But we'll hold back on some of that discussion to dig down into here in a few. So let's talk about the mortgage technology trends. You just highlighted that, there are tons of different trends growing in the space, but from your perspective, what are some of the growing trends in the development space for mortgage technology? We have lenders out there who are heads down, focused on staying alive with their 30-day production sales cycle, and I totally get that. Volumes being so down and margins are razor thin, if not even there. But at some point, to get ahead in this business and lower costs, lenders need to get off of their current LOS. So in order to be able to take advantage of some of these trends and some of these advancements, in order to do, as we talked about, loans faster, easier, better, more accurate data, et cetera. So what do lenders need to understand is happening behind the scenes at mortgage tech firms like a Finastra?
Yeah. So when you ask about mortgage trends and technology and, what are the buzzwords out there, right? We all talk about AI and, artificial intelligence, machine learning, APIs, and even data warehousing and all of the big buzzes around it. But I think what a lender or a client, prospects need to look at is, what do I need to do for my borrower? So the first thing really is meeting your borrower where they want to be met, streamlining that application process, and really through an omni-channel. When you look at who the borrowers are and where the market is going, millennials are the biggest bulk right now of who's going to be buying homes, and they're all digital, right? They have their phones with them 24/7. They want to apply online, but they also want to talk to somebody. So that's where that omni-channel functionality or technology comes into play. You have to have an online presence. They want to be doing their research on their phones. They want to be looking up things. What are your rates today? How do I apply online? But you're also going to have those borrowers who they need to talk to somebody. They want to come into the bank. They want to come into the credit union, sit down with a loan officer, get their answers done. So you have to be willing to have technology out there that's going to meet your borrowers where they want to be met. So that omni-channel, I can start on my laptop or I can start on my phone, but if I get stuck, can I call a loan officer and have that loan officer finish it for me? And that's where that's where you take that technology to meet those borrowers where they want to be met. So that's, I think, your first, your first step.
Say that again. I'm sorry.
That first step in technology, that's where they want to be. Finastra and East Partners did a survey, and only 29% of people have an online presence. So really 71% of the financial institutions out there don't even have an online presence for a borrower to apply online in the consumer lending space. That's a lot.
Shocking. That's shocking. If 70% of our buyers in the years ahead are that younger generation, millennials and Gen Z and et cetera, like you said, they need these tools. So lenders are going to have to figure out a way to be omni-channel. I think you said that extremely well. But that's a tough balance, right? Where do I start when all I want to do is get an application? I'm in a little bit of survival mode, right? So I'm empathetic to lenders having to juggle making sure that they're hitting all these different approaches, how the client wants to best be served, as you said. But that can be a lot to take on. So what I hear you saying also is they need to make sure they have a very explicit development roadmap for how they're going to meet these needs in the months and years ahead. They can't just ignore it, right, and be heads down on their technology. They really need to be thinking about, first let's start here. Let's start with a app. Let's start with an online application. Then let's migrate into, maybe some, I don't know, AI texting integration capability in order to be responsive to a customer? Or are you thinking that, boy, it really needs to be a live voice the moment they're stuck in order to increase your pull through? Any thoughts on that?
Yeah, there's a lot you can do, right? So you can take baby steps, put that loan application out there, and you can do it, as I said, baby steps, right? So we have the application. We don't do a lot of product and pricing out there yet as a lender. That can come later, or you can go full in, right? Have it all, but rely on your technology partners, right? So the financial institution doesn't have to build in that technology, that AI, that machine learning. The technology partners, us, Finastra, should be building that in for you. So for example, borrower applies online, at the end of the application, we can tailor a list of documents that we need from that borrower based on their loan. So if you tell me you're employed, I want your W-2 and your last year's pay stub if you didn't do the online verification of your employer. Or your bank statements. I need 2 months bank statements, right, to prove you have the money to buy that house. We ask that at the end of the application. Through machine learning and AI, we can then take those documents, read them through an OCR, read the documents, extract the data, and then verify it against what you put into the application.
What a great example. I love that.
And we will do that for the lender. The lender doesn't need to know machine learning or AI. It's built into the technology that you buy. So really creating that efficiencies for both you and your borrowers. So really taking them fully end to end quickly, right?
Yeah.
And one of my examples that I use in that is we can build in some business rules. So you apply online. I tell you I need 2 months bank statements, right? And you go and you upload January and December's bank statements. Well, we all know that's outdated information, right? So you upload those documents to us without a human intervention. It reads those documents and it says, oh, well, Keith, I really need you to provide me with March and April's bank statements from Bank of America. So now you're personalizing it and sending it back to the borrower, telling them that they need those documents. So overnight, without a human intervention, right? So you applied to last night. Overnight, it reads that, it sends that message back to you today, and you're like, you get a text message, hey, Keith, your loan application has an update. You go into loan status, you see, oh, I really need to provide you with March and April's bank statements. You upload them, and before anybody sees that loan transaction, those conditions are cleared. How nice is that for, to speed that process up?
Yeah.
So now
that's just brilliant. No, I love that. I think that's a great, I love the way you basically bookended that, because at the end of the day, I think that's what lenders really struggle with is I hear all of this technology advancement and I hear all these tools coming out, but at the end of the day, they don't have to go it alone. If they have the right partner in their tech vendor partnership, they're going to play a key part in helping guide them. They're not just going to, like a Finastra, where you don't just sell them technology, where I say you don't love them and leave them, right? Where you love them till they sign the contract, then here's your technology and leave them. Your approach at Finastra has said, hey, listen, what we're going to do is we're going to help you meet your needs today, but we're also going to be here to help you incrementally take those baby steps to successfully integrate and leverage all the technology advancements and the hot tools that are part of technology trends today, so that you can maximize your opportunity to have a relationship with the customer, so you can do a loan faster, easier, more efficient, more accurate data. You can take out some of this back and forth with a consumer because you've automated using AI tools. So I really like the way that approach is, that lenders shouldn't overwhelm themselves with all these trends and changes in technology, and just make sure you're aligned with the right partner that's going to help guide you through that. Did I summarize that All right.
You did. Yeah, because we're going to help you along the way. One of the things we know, you and I've both been in this industry for a long time. We know rates are cyclical, right? So they've skyrocketed since we had our big refi boom in 2021, 22, and things have really slowed down. Lenders have had to lay off employees. They've had to skinny it down. As you said, margins are really tight right now. We know it's going to come back again, right? So the people who are applying at that 7% interest rate, and hopefully the next year, things will come down. That's going to create our next refi boom for all of those customers who want now 5.5%. We might probably not get down to that 3% again, at least not in the near future. But if we come down even a little bit, we create that refi boom. You don't want to have to go higher again in order to lay off in the future. So if we can, with the technology, create those efficiencies for you, we're going to help you out. So do more loans with less people. If rates drop tomorrow, that technology kicks in and you can process more loans timely and still meet that 30 days that customers are looking for to close a loan.
That's well said, and I think you're reading the tea leaves accurately. I completely agree with you, MaryKay. Kind of what the anticipation should be in the forward as we look forward, and how lenders really need to kind of make sure they're aligned with the right technology partner today, during this downtime, if you will. So you hinted at this. Let's talk for a few minutes, if we could, about we've talked about these trends in technology advancements that are taking. Can you talk about how these new innovations and advancements are really going to help lenders today? You gave a couple great examples earlier, but what are the net benefits to their business and the bottom line that they really need to understand that says to them loud and clearly right now that they need to be thinking about shopping for a new tech stack, new technology partner today?
Yeah, so today things are slow, right? So you have the time to go set up a new technology partner. And you should be looking at who's going to help you in the future take your business further, right? Is it the existing one that doesn't have a lot of technology in there, or is it a new one that's going to help you create those efficiencies? And I think Finastra, we're working on that. We're doing that today through workflow automation. So if you come set up a loan today where you don't have to compete against having a full refi boom, you got to close all these loans, you have the time to go set up that new system in, say, 90 days, 120 days, where if you get into, full stack refi boom and you're focused only on your production business, you don't have time. And then it's going to take you 6 months, 12 months, and you're going to lose the ability to create those efficiencies. So our goal at Finastra is to help you process more loans, as I said, with less people through the use of technology and workflow automation. Get those loans in and out the door as quick as you can, which also is going to help your margins, right? If I don't have a loan sitting on my processor's desk for 45 days, they're focused on this loan. If I can get that loan in and out in 21 days, 30 days, you can't always control your cycle on a purchase, but you sure can on that refinance. Through automation, if we can speed it up to an approval within, say, 2 days to a borrower, I can close it immediately, right? I can get that title policy and close it. And then with the reps and warrants the GSEs have now on property, you might not even need an appraisal, and you can really speed up that time from application to close and increase your margins because you're not spending as much time on an application. Yes, technology costs a little bit, but it costs a lot less than a full-time employee does.
Yeah,
if you think about, adding, $50 onto your processing fee for your tech provider to automate the process. How much are you spending on a full-time employee to actually process, do a stare and compare at all of those documents, type out all the conditions to the borrower that they need to provide you, those documents? You're really saving money, even though it feels like you're spending a little bit more on your technology.
Yeah, I think that's an invaluable perspective, and I think that that's where lenders really struggle with understanding the full ROI that's associated with making that quick investment today. If you scale that out, and I'd say again, lenders need to have a long-term perspective when they're in this industry in order to really survive and thrive in the next turn of the market. So it may cost you a little bit, like you said today, but the benefits are going to far outweigh those costs. You're going to get a faster ROI, because I mean, I was actually doing some studies on this recently, but about 70% of of the cost to produce a loan, which is over $14,000 right now, per the MBA, per loan. So if you can find a way to become more efficient and focus more on productivity per employee, you will reduce your overall cost, because that's that perspective. That's a paradigm shift from today. Today, people are focused on volume and units. But if you start to focus on a per employee productivity measure, then you're going to start to find ways to better leverage technology, and in working with your technology partner like a Finastra to be able to increase their output. And once you do that, you start to dramatically reduce your human cost, which is 70% of your overall operating costs as an organization. So starting to make a dent in that gives you a little bit more revenue and a little bit more latitude to be able to buy rates down so you can be more competitive and do more loans. I think our industry is just so overwhelmed with heads down thinking about production on a 30-day basis, as opposed to really taking that full scope perspective that you just alluded to, that to really do the math and start compounding it out on a per loan basis. I mean, it can be a massive savings. Could be $500,000 in it within a year. So
Absolutely. Yeah.
I summarize that okay?
Yeah.
It really is a fascinating discussion when you start to back into the math on it. So I appreciate that. I think that lenders probably don't. They sometimes would you agree with me here? Sometimes lenders don't think they need technology until something's broke, as opposed to where's the opportunity to increase efficiencies and effectiveness and lower costs. That's when I should be looking for new technology.
Right. Right. Don't wait till it gets too far and I'm overwhelmed with the number of loan applications I have and I need to then create those efficiencies. It's too late, right? Now I have too many loans. I can't go in and implement a new system because I'm overwhelmed with the production that I have. So now take the time to look at your technology stack and do I need to make a change to something that's going to bring me more efficiencies down the road, so I don't have to go and try to hire all of these mortgage people who know how to process loans. Through technology, we can do it for, that your technology can do it for you.
I love that. So speaking of advice, I mean, you're starting to lean on some advice there. So having run implementations, now running product development at Finastra for just a few years, you know firsthand that lenders will always make the excuse that now's not a good time to replace their 5+ year old technology. When markets are great, we just talked about they're too busy to make a change, but when markets are bad, they say they can't afford to make a change. So what advice do you have for them to be able to cut through those polar opposite challenges that result in it's never a good time? I mean, what advice do you have? What top 3 pieces of advice would you have for them?
Yeah, I think, rip off that Band-Aid, right? Rip off the Band-Aid and figure out what you need to do to make yourself more productive and look at who's going to help you get there, right? So one of the things, and we didn't touch on it with technology, but really is data, knowing your data that you have. And through technology, you can increase your loan production, even in this slow time, right? So borrowers, as we talked about, borrowers like to be online. They like to at least go check out online where who's got an application, what are your rates? They might even start well, then they get shy and they, I don't know if I want to apply for this mortgage. I'm not sure. I don't know enough. And they drop off, right? Through data and data we can produce, we can help you grow that production by reaching out to clients or borrowers who've dropped off. So not only do we capture right away in the beginning of the point of sale application, we capture the borrower's name, their phone number, so that we can reach out to them in the future. So if they drop off, you can pass those leads out to your loan officers and capture that loan application through a loan officer. One of the things we've also heard hesitant on why people, it's not even just the cost. They don't want to upset their loan officers by bringing in technology, right? So loan officers, they make their bread and butter on loan production. That's how they get paid. The more loans they get in, they're making a commission on those loans. So they shy away from technology because they don't want to upset their loan officers. This is how you buy your loan officers into technology. Give them leads that they didn't have yesterday. So if borrowers start online and they drop off, and we do know there's only I think it's about a 40% pull through on start to finish. And with data, we can share with you where your borrowers are dropping off. Where's the bottleneck? Is it because you've asked too many custom questions within your application and they just want a quick and dirty application to get you the information? Or is it overwhelming? I don't know what you're asking me this question for. I don't know why you want my social security number. So I'm gonna stop here and drop off. Well, those are great leads to give to your loan officer. Somebody came to your site, they saw what you have, but they didn't finish. So it's a great way to bring those loan officers into that application. And using that omni-channel that we talked about, I can take that application that borrower started and I can pull it into the loan officer portal and have the loan officer finish it. So they don't have to start from scratch with that borrower. They can take all the information they've already had and start it now, or start it, from where they left off. So why not do that today when things are slow? Get on that new technology where you can bring things to your production staff that they can use today before things really pick up.
That's a great point. And that just dovetails right back into the cost to produce, that because of these efficiencies, you're going to be more efficient. You're going to lower your overall operating cost, your customer acquisition cost. I mean, you're really focused on that. That's probably what so impresses me about our conversation today, is that you're really focused on the business. You're not just focused on, here's the cool features and functions of our platform. You're actually talking about the real world application of them as a business partner to your clients, to your customers, to say, we're not just handing you technology, we're actually talking to you about how to best leverage the technology in order to increase sales, lower costs. I mean, we don't always hear that from technology providers. We're generally hearing, these are the cool whiz bang things, and that's why you need our technology. So there's a real differentiator there. And I think that boils back down to, you got to have the right partner, the right technology partner and that probably just speaks back to your experiences. You've lived on the origination side. You've carried a bag. You know what it means to have a responsibility to originate loans and sell loans, and where's the opportunity for improvement. So I applaud that approach. I think that is the exclamation point here today. What other piece of advice would you have for lenders to really think about, as they think of that mountain of going out and buying new technology and implementing it? And, is it as hard today as it used to be?
Buying technology, is it as hard as it used to be?
Buying and implementing technology, yeah.
Yeah, one of the things we do, it's not easy, right? If you're setting up a whole new LOS system, I'm not going to sugarcoat it. You're installing new technology, you're setting up your fees, you're setting up your products. but we do try to help you as much as we can and bring things in for you. And technology helps us do that. So if you're a Fannie Mae or Freddie Mac shop, we can bring in all the standard products and all the standard LLPAs for you. We can integrate with a number of different customers, and this is where technology kind of comes into play. We use APIs or SPIs, service provider integrations, to really reach that ecosystem so we can work with a number of different vendors in the same space. So as much as we can pull everything in for you, we do, but you still have to learn the system, right? One of the nice things about being a SaaS product that we are and in the cloud is you don't need a full-time technical person on staff to run our software. We do it for you, right? We house everything for you on our servers. You don't have to download anything. You don't have to download new releases when they come out. So that's all done for you. But we do teach you the system so that if you want to change products, you know how to add a new product into our LOS system, or you know how to go in and change a fee. But we do work with you through the implementation process and hold your hands learning all of that. And we automate as much as we can to help you get that set up in a shorter period of time. We've just worked with 3 credit unions. We were able to get them set up and live within 90 days, which is really a good feast for setting up a point of sale and a loan origination system, start to finish in it was right around 90 days. We got them all up and running. They all 3 wanted to leave their existing system, and through, just teamwork, right? The more you help us or work with us, we can get it in a short period of time.
I love that. And, MaryKay, I'm going to call out something that I think our industry has been victim to, and I think that's where the opportunity for improvement is. We've probably made implementations more difficult than we need to. One, the industry over the last 10 years has just run out to buy the new shiny object. So I'm curious to see if you agree with me here, but I think because of that new shiny object at all these different integration points of the loan process, whether it's sales, whether it's a CRM or a marketing platform or POS or some other mobile app that's integrated. They've gone to all these extents of trying to get the best in class, when at the end of the day, they've only created their own mousetrap that's very difficult to get out of, when they should just be looking at kind of a one-stop shop where we provide you the necessary tools of everything you need. So implementation and management of your new systems isn't as difficult as you think it is, because you've built this amazing, somewhat ineffective tech stack that's inefficient because of all these moving parts. So would you agree with that?
Yeah, I do. Instead of having to manage, and vendor management has really become, there's a lot of regulations around your whole vendor management stack, right? So if you have one POS, one LOS, a different doc provider, and you have to manage all of those vendors, it becomes a full-time job for at least one, if not multiple people to manage all of that. So one of the things that we've done is really created that one-stop shop for you. So we do integrate to a doc provider and resell that product within our paper. We have a number of different integrations built into our product that customers don't even know about, and we don't charge a separate fee for it. Things like address validation. So as the borrower's typing in their addresses, we bring in address validation right into the product. The ability to scan your driver's license and pre-fill out the application. So things like that we build right into our product and don't even have a separate vendor management on that piece of technology. So just making it really easy for both the borrower to apply using these technologies, and from a lender standpoint, not having to maintain all those additional vendors and outsource or, doing the whole contract piece of the work. It's all just built right into our products.
Oh, that's advantage right there, folks. So
Workflow automation is another piece of it, right? So we've built the technology. We partnered with a third-party vendor to help us out with the workflow automation and the machine learning and the AI. And that's one of the things as a tech provider that you look at is, can we build it? Do we have the skill sets to build that? Or is there somebody else who's already built it that we can just partner with and bring it together into our product? And that's what we've done with our workflow automation. We didn't go out and build and do all the AI and the machine learning. We've done parts of it ourselves, but we worked with a third-party vendor, but it's built into our product. So our clients get it when they sign our, it's part of our sales process to implement workflow automation, but they don't have to go out and vet a third party, do any type of integration, get some login credentials and hook it up. It's all done for them. It's all built right in. So it really, again, saves in that cost because we're doing all the vetting of the other vendors for our clients.
Which actually makes it easier from a system administration at the lender level, system administration and management level. I think one of the big issues I've seen out there is that we have a lot of these big systems, and the lender, once they purchase the platform, they find that the administration and management of the system is just overwhelming, and they almost need a staff in order to be able to do that. And that's where you guys are helping cut costs as well, because it's easily managed and maintained by the borrower, or I'm sorry, the lender. So that's just another major distinct factor that lenders really need to be thinking about considering. How much money are you putting into the management and maintenance of your current system versus what it could be if you moved over to a more cutting edge system that's all in one, that removes all the noise in the tech stack, and it ultimately puts you at more risk because of the lack of data integrations, or because of the vendor management compliance requirements, et cetera. So it just, again, making a case for lenders really need to be thinking about their tech stack and really thinking about how they can make that more efficient with friendly firms like yourself at Finastra. So MaryKay, I've just really enjoyed this conversation today. As always, you're providing great insights and advice for mortgage lenders. Thank you. I appreciate it. And executive leaders, you heard it here from the Shark Cage. There is never a good time to make a technology change, but you can't let fear of change keep you paralyzed or keep your costs more than they should be. If you do, you're at risk of your competition starting to take your market share. So we're excited to share with you some of these key insights about mortgage technology trends and the benefits realized when making a move to a platform like Finastra. MaryKay, I really do appreciate your time. Any last words for our listeners?
No, I just want to thank you for, having me here today. I think, Finastra, we've done a great job really in the technology space, bringing out those efficiencies, because as you mentioned, they're not just clients, they're partners of ours. And one of the, when our clients win, we win, right? So the more we can help them be proficient and efficient and bring those costs down, that's what we're here for. We're really here to help our clients do more with less.
I love it. Well said. Exclamation point. Learn more about all the great things that Finastra is doing by visiting www.finastra.com. Until next time, this has been another exciting episode in the Shark Cage. Have a great day.
Thank you for joining us in the Shark Cage. To be a guest on a future episode, send an email to info@blackfin-group.com. To find out more about the show or the information provided in this episode, visit BlackFin Group online at www.blackfin-group.com.